Good afternoon. This is the Elliott Wave weekly update for the S&P 500 being recorded on Sunday, July the 28th, 2024. I'm going to start here with the SPX, and as I stated within the NASDAQ update, I'm changing the title from using the Eye of the Storm podcast to just an Elliott Wave weekly update, and again, going to be reserving the podcast to do exactly that. Podcasts with invited guests. And it'll be over a myriad of topics, some related to Elliott Wave, others just talking about the markets, maybe talking about a specific trading strategy, et cetera, et cetera. But I'm going to keep it as a podcast type of a channel. Now, starting here with the cash market and the SPX, I'm going to go up to that weekly chart real quick so I can review exactly where we are. Again, the weekly picture remains pretty much the same, and that we are still within a primary fifth wave going up, and that within it will be 5 waves of intermediate degree, of which only 1 and 2 are complete. So we remain within the intermediate third wave going up. Where are we within that? It will consist of 5 waves of minor degree, of which we have 1, 2 complete, and 3 just completed last week. And we're starting down, actually, I think it was not last week, but the week before. And we are starting down within that minor fourth wave correction. And it appears that we may have completed minute wave A of minor wave 4. So that still leaves us that completion point for minor 4, a rally up to new all-time highs in minor wave 5. That will complete the intermediate third wave. And then we come back down intermediate fourth wave. And that likely will bring us to the same areas as to where that minor fourth wave will complete. And then we race up again to new all-time highs and an intermediate fifth wave, and that will then complete the primary fifth wave, which we are within. So we still have at least 2 additional new all-time highs, and how many will be created as those waves move up to complete those moves. So still plenty of opportunity for new all-time highs. And again, a little bit longer term picture, I am looking for a move above 6,000 here in the SPX. Now, I'm going to bring this down off of the weekly and bring it down to the daily so we can start to see how we have coming into this. So we can see that we have minute 3, minute 4, and then we come back up in minute 5th, which we did complete, and that date actually was the 16th of July. We put in the high, and that high was 5,669.67 here in the cash market. So basically, we could almost say 5,670. We rounded up real clean. And then from there, we started or put the completion point for the minor third wave, and we started down in a minor fifth wave. And so I'm going to bring it down to the hourly chart. Oh, let me just add, the expectations remain for minor wave 4, the correction, to get us into this rectangle, into this box, where the top side sits at 5,265, and the lower end of the box sits at, let me go over to this one, 4,953. That's the bottom of the box, and I actually need to move that over one little bar. There, now I got it down to where that low is. 4,953 basis the cash market. So as Elliott always taught us, that within a fourth wave correction, you look for the terminus of this fourth wave at the terminus point or the end point of the fourth wave of 1 lesser degree. So we're in a minor degree fourth wave. Will find its endpoint within the price territory, if not towards the end of the minute fourth wave, which is 1 lesser degree. Okay, so now let's drop down to the hourly chart and let's see what this all looks like. I'm not as crazy about this particular count. It all fits, it all works. But I don't particularly, I think that the market got a little bit cagey and then suddenly just burst lower last Tuesday, I think it was. And actually, let me just check the date on that. That was on the 24th. So we're talking about Wednesday. And oh, excuse me, we're talking, yeah, Wednesday, where we gapped lower. We gapped through a lot of points that just shoved the whole market, just kind of came tumbling out. And we had a pretty strong down day. And so we remain within a period where that downside activity is not going to be actually forgotten, nor has a lot been released from it. But still, how I'm counting this on an Elliott basis is that low that we reached on the 25th, on Thursday, did mark the completion point for the minute wave A of minor wave 4. So what we have to do is we have 5 waves down. Now, believe it or not, it also can be counted as A, B, C, which leaves it 3 waves down, which opens up the path for the S&P to put in more of a flat type of a corrective minor wave 4. Unlike the NASDAQ, which pretty much did a clean 5 down to put in minute wave A. So I'm counting it as 5. And wave 3 is not the shortest wave. Wave 1 is, and wave 5 is the longest wave because of the gap and all the activity that took place. Now, once we move over to the future, we'll see that there is just a tiny bit of, actually might be here as well. This is 5,585. Yeah, there's a slight overlap that we have right here, 4 to 1. But I'm allowing it on the basis of the rest of the count and how it fits, and that wave 3 is not the shortest wave. 1 is. Now, I'm going to leave it as this because I prefer to keep the ES and the NASDAQ pretty much matching in terms of counts because of what we got coming up. Next week we have Microsoft and AMD, plus some other stocks, but those two being in the Mag 7. We have AMD, Apple, and Microsoft. Apple coming out on the 1st, but up until the Fed, because they put their decision out on the 31st, we have, I believe, AMD and Microsoft prior. Now, a lot can happen within those earnings reports. As we're seeing thus far, yes, they're coming out and they're actually beating estimates, but not by much. And somehow the market is going like, okay, well, we're going to go down anyway. And they take the stock down. So we're not really seeing anything thus far, at least out of the Mag 7, that they're kind of blowing the doors off and just kind of like producing these stronger rallies that just don't quit. And then that overthrow gets put out to who's ever next up on deck to report earnings. They start to rally as well. So we're not really seeing that now. So what can we kind of look at if we're leaving it as a 5 waves down? Well, then if I'm putting that as A, then this is going to be A of B, B of B, and we're coming up in the C wave. So it could be A, B, 1, 2. So based on that, what would the expectation be? Pretty much we go up strongly tomorrow, and we do 3 of C. And if we're kind of looking at this in the right tone, then, because don't forget that the market gapped up on Friday. So, and it's just, with the expectation actually would that we first finish it and go down and finish the move. Well, that didn't happen. So that's why I kind of flipped it around and put the minute wave A. Now I can still keep the minute wave A there, and this would just be a minuet A, minuet B, minuet C. And again, that's going to be, that's right now sitting in the alternate position, but I'm telling you, the weight is on it to be shifted and moved. And tomorrow could be the day that I actually do that, because we might get a strong enough rally where it does kind of come up. Like we should do a more flat minor 4. So because I would not be expecting, if it's counting this as 5, I'm not expecting it to get itself above 55.63. That would be kind of like the upside limit. In fact, the way this is lining up right now, at least on the hourly chart, is that we have the 200-day moving average coming in right at the 50% fib level at 55.30. Now, if we really start to cruise and we break above the 50, that's a 200, and we cruise above the 50, which is still kind of pointing down, but again, is at just below the 382 level. But if this is what I think it could be, where we have A, B, 1, 2, we're looking for a third, and it should just really gap higher. I got to tell you, that's, in my opinion, what it should do. We have a single gap, we have another gap, and we get ourselves up into this area. Now, depending on if this is the correct count, A, B, 1, 2, 3, 4, 5, we could get up closer to being flat, or at least 786. And I'll just give you another level. I'm just going to put it out there, even though I'm not necessarily in love with it. You can see 5610 is an upside level. And that, I tell you, if it got up there, I would be in the flat category. We're within a spit of getting up another 60 points and equaling the high. So while 5 waves down, I'm not going to be looking more than 618. But if I need to relabel it, which I'm on the fence with, I got to be honest, I'm on the fence with, that this is A, B, C for that minute wave A. And then we're doing the B wave, and this is A, B, and we're going to come up in a C wave, and it could be very dynamic. So that's how I'm going to leave it in the cash market. Let's go over and take a look at, and first of all, moving averages I just explained. They're all still pretty much, we got the 13 getting ready to cross above the 20. The 20 is still a little bit flat because of how I kind of ended the day. But I think if we gap, this thing goes right with it. Both go right with it. So going over and taking a look at the futures market. It's the same deal, although this one did not even produce a little bit of an overlap. Almost, but not quite. But again, you can see it still looks pretty weird. We have this big dynamic 5, which fits cleaner if we were to move this to 1, 2, 3, 4, 5, A, B, C. So this also can work both ways. And here again, we saw a much stronger rally attempt where this could be wave A, and that's A of B, B of B, and we're already in C, and it's 1, 2. Boom. And here again, if we also add the 786, look where we get 56.59, 56.60 almost. So again, within spitting distance of the existing all-time high at 57.21. Now, again, not looking for that, but we could get up to where it would be considered more of a ABC flat, but not actually reaching a new all-time high. It's still then I'd be looking for a C wave to come really crushing down and break below that low at 54.32, I think it is. Yeah, 32.50. I'd be looking for it to break that. And in that case, we do have additional, and maybe get itself all the way down into here. No, isn't that weird? I left those there. Let's remove those. So there we have it. So in the futures market, it's still, I'm going to take my cues for how this all begins the week. There's plenty out there that could throw this, complete it, and then the next earnings report or the Fed or anything else could just start to kick in a C wave right into gear. So rally, yep, both NASDAQ and the S&P cash and futures market all are very suggestive that we should start the week to the upside. But as I said in the NASDAQ update, I will include here, we leave open the potential for it to just continue to drop. Now, if it does so, and I got to move this to the 3 and this to the 4, then I'm going to come down as such. And I'm going to put that there. And we're going to put it like so here. And then we're going to come over. No, I got to put it down. Where am I going with this? 1. Thank you. Here and then over to here. And you can see 100% would already be done. 1.618 is 53.88. Now, what's going to happen? Well, it's dang close. Got there. If it gets above 55.34, this is off, the other's on. And then again, I'm telling you, it is like I'm leaving them together in terms of, is it an ABC down? I'm looking for an ABC up, but is it an ABC down? We have the chance of actually getting up a little bit higher. So we will see. Now, here in the futures market, we are really looking at the market giving us the final clues tomorrow in terms of where all this is going to end up. Whether this is going to be an ABC, and that's going to be still minute wave A, or is it going to be the additional downside, which then, of course, the A and everything else gets moved over? Or are we going to continue to get, move over as if we're going to continue to go down? If we go down, we should pretty much do it starting this afternoon / evening. Once Globex opens, it would open to the downside. And that would start to give us the clues for what we're going to be looking for tomorrow. So that's just where I'm going to leave all of this. Now, again, like I mentioned, we have AMD, we have Microsoft. Those are all before the Fed. And I believe that Microsoft is on Fed Day. Let me just double check that. Yes. Of course, it always does that. And let me just open it up. It's on Tuesday. So we got the Fed and I believe AMD on Tuesday. Yep. No, we have AMD and Microsoft on Tuesday. The Fed is on Wednesday. So we could know a lot. A lot can happen between now and Tuesday in terms of it kind of dwindling and going down, or getting up there and finishing what we would consider B wave. So that's kind of where it's at, kind of sitting in the middle. I wish I could be more definitive as terms of what the market is trying to tell us, but you can see how they're trading it. They're keeping everything open. They're not pointing to anything. If anything, they're pointing that they're going to move it higher. That I would take. But again, that we'll know also today. And I'm talking about, it's like, I'm not just talking about they're going to move it down to like it'll be down 10. No. If they're going to start to move it lower and give us indications that we are heading to an additional low to complete this minute wave A, then I would expect it to kind of gap and go. So we shall see. Also, we have AMD, Microsoft on Tuesday. We have the Fed on Wednesday. We have Apple on Thursday. So it's kind of a dynamic week earnings-wise. But also just next week, there's like, I think, 160 S&P 500 companies reporting next week. That's a lot. And some are Mag 7 and some are not. Okay, so it's just could be a very interesting week. So I'll keep open to how things trade. Okay, so the next Elliott Wave update will be on Monday, July the 29th. I'm just getting my dates mixed up and all in my head as well. I hope you all have a really great weekend, the balance of the weekend, and the next update will be on Monday.